Welcome back. We're here at the Real Estate Roundtable with IPRG, and we have another guest joining us today, Chris Okada from Okada & Company.
How's it going? Thank you guys for having me. It's your office is pretty dope. I know people out there only see like the faces and the profiles, but for anyone else that doesn't know, they have a pretty sick office downtown.
Thank
in
you.
FiDi.
Appreciate it.
Yeah, you guys should, when you invite clients over, I think that it's important.
Yeah.
It's certainly important.
Tell us more what you think, like walking in, first impressions.
Yeah,
you're an office, you do mostly office leasing.
Yes, we
So
do.
yeah, tell us like just your overall thoughts when you walk into a space. And
I think it's important in the world of presentation and also of really just when you pitch a higher profile landlords. The days of in-person meetings are a little bit less, obviously with Zoom. But with that said, when you do have a bank, a fund, a higher level landlord walk through, and you really want to win this, and you invite them over, because a lot of the larger accounts that you will win are probably like 3 to 8 year friendships that you create through the years. And I think that having a good office presence is important for part of that. And then hosting, inviting people over, having parties. I think it's all part of the game. It's all part of your business development.
you walked around the whole space?
I did.
Yeah, cool.
Eli Zemsky, my homie, he met me in front and was just like, let me show you around.
Good man.
Let me show you around, and showed me his corner of the world, and then brought me over to you, over here.
Very nice.
In the in your corner.
Yeah, so this was a COVID deal for us.
Yeah.
And we started off at how big was our first office? At 1,000 Dean Street? Was that?
That was 5,000 feet, right? It was $5,000. It was.
It was definitely $5,000.
It was $5,000. It was
square footage.
What was 3,500?
I think it was listed at like 4,000 or something, but it was tight. It was like
But it was
small
a square,
space.
and you had that huge. We had a huge like steel bar in the middle.
The columns,
the column in the
huge
middle.
columns.
It was
Concrete.
It was $5,000. It was not 5,000 feet. And the next place was how big? That would have been 6,000 feet.
That must have been like 6,000 or 7,000. That was 225 Broadway. Anyway,
Yeah.
like, we kind of grew and grew,
Sure.
and then our lease expired over at 225 Broadway. We always liked this lower Manhattan area, and then we were out in the market, and we were at Braun.
We leveled up.
We were at a Braun building. This is owned by Camabees. Broker found us the deal, but it was
Great.
sublease during COVID. And what was amazing about it is all the furniture and all the fixtures and all the technology, it was all here. So the people that we took the sublease from, they invested heavily in the space.
Sure.
What was amazing about it, I mean, it's amazing that we have a full floor, 29th floor, the views are great. But what was amazing is that all of the equipment in here it's just like built for a brokerage.
Yeah.
It was designed like perfectly for us.
It looks amazing, definitely, and with your branding, and you guys really came up in the last few years. I definitely see you guys on Traded. I see you guys in the paper as far as a lot of action. You did a deal. Well, Eli did a deal on 23rd Street. I really watch the Chelsea, Times Square, Rockefeller Center, Chelsea, Union Square submarket. I really pay attention to every kind of trade in the middle market. Really above maybe 15, 20 million. I really want to know everything that's going on, whether it's residential or commercial. So congrats on your growth and everything. And I think that we talked briefly about this, the pre-pandemic brokerage world and the post-pandemic. If you make it through and you play your cards right in 21, 22, 23, I think it's like a 3x. It should be, hopefully, 2 to 3x top line revenue and or culture growth as far as a brokerage firm. And here's why. Because people in larger global institutions, publicly traded companies that are real estate brokerages, they can't do this. They literally can't. Maybe they try to on the side, but there's so much red tape to get 4 microphones and a camera. Mm-hmm. So this is, in my opinion, one of your value propositions of being able to enhance your brand online with social. And I was telling Zach and Eli, I was telling them that social media for us is a 7-figure revenue generator. It's a brand builder. And it is the new sort of place to announce your deals. You guys do a great job on that.
Thank you.
And we have been going on 6 or 7 years, and really it's to drive traffic to our website. That's where the origins of everything that we did. We were obsessed with website traffic. Because we needed people to see our listings. We wanted them to see our buildings. What else can we do? Who else can we align ourselves with? So we had Larry Silverstein. We had Marianne Gilmartin, Ryan Serhant. We've had James Nelson, Bob Now. Anyone and everyone that's done, $5 billion plus in brokerage and or built $1 billion of property here in New York. So we really just started doing that, and it sort of snowballed. But it's very hard to be focused on social for 5 years straight. So for us, it was like ebbs and flows. But during the pandemic, I mean, no one was in the office, and I think iPhone usage was up something like 75%.
I believe it, yeah.
Year over year. And everyone's sort of screen time was up 50% from the previous year, or 30%, whatever. It was just insane, and luckily we were there. And so we just continued pushing forward.
So you're obviously like pretty active on social media. Is that something that just like came naturally to you, or did you have to really like?
We spent a lot of money on it. I mean, we had to, with the equipment, with the production, and it's also time value of money, right? So if you're spending 3 hours a week or 4 hours on social, you're not on the phones or you're not putting deals together. So it was a balance in the beginning, and but we've spent a lot of money. Camera rentals for larger things. We did a mini documentary called The Resilient, which lives on our website, and essentially that wound up being like a $40,000 production.
Jesus.
I don't know how it got out of hand. We created a script, and we created all these things, and this came from the streaming wars, because now all the companies, they started producing their own content and their own movies and
everyone's
documentaries,
doing that now.
right? So what does that look like for real estate? People want to be entertained. People want to have information that's not boring. And I tried a podcast, and it was pretty dry, so I killed that.
You started your own podcast?
Yeah. We had a podcast called 36 in Broadway. I think we did 15 episodes, but I cut that because it was two things. Our viewership was not going up. People were still turning off after 40 seconds, to 2 minutes. No one made it past like 7 minutes. So I was like, all right, we're spending all this time and money, and no one cares. They're watching the first 30 seconds and it's goodbye. And now I think because of TikTok and everything, it's even less.
I'll be honest. So you got me during COVID. I remember seeing your videos, right? Like I always knew who you were. I knew the office leasing, the office investments. But I remember some videos that really caught my eye. They're like big productions. I remember like you had some like car show. You're in some garage with the cars, and you had like a partner of yours, I think, who's like into like Porsches. And then I saw his crazy blue GT3 driving around.
Yeah.
Saw him, and I was like, oh, I'm seeing all these videos. Like it was crazy.
Okay, so that was my birthday.
Yeah.
Right.
Okay.
So I went through a phase, and I still do this, where I feel it's really important to capture like the fun stuff too.
Yeah.
Definitely.
So yes, we the Classic Car Club is on 34th and the West Side Highway, and it was April of 2021.
Okay.
We were still knee deep in COVID. Turn the clock back 2 years ago. People were still wearing masks. I wasn't sure. I didn't know. But the garage is 40,000 feet, and
Yep.
there's a huge deck outside. So for anyone that's been there, if you have not been there, I highly recommend it for drinks and hanging out. And there's all these Ferraris, exotics, and Lamborghinis, and it's just a great time. So that was a birthday thing, and I also did a client appreciation event there. So that could have been it, or it could have been.
I think it was your birthday.
Okay.
I remember you had like the drone footage and all this stuff. It was crazy.
Yeah,
It's good. I like cars though, so it really caught my eye.
Yeah, now we're talking.
Yeah, I saw this video. I was like, oh my god.
Yeah, so, and for you guys, if you get an assignment, it's a $100 million exclusive, right? You have the OM, and you have your, you put it on your website, you put it on CoStar. What else are you going to do to capture attention for that listing that's that important? So that's where, it's sort of like, how do we take our social to another level, really, to, number one, honor our exclusive better than anyone else can. And I think that you guys turned up the heat over here for sure, but I definitely encourage you and believe that you should also get a little, add some personal flavor to that. If you like cars, how do you involve, Porsche Manhattan to do a collabo? It's not going to be on a $10 million listing, but it may be on like, dude, this is my biggest listing. I'm not going to fail.
Yeah.
What more can I do? And that's sort of the birth of a lot of our content. Is like, wow, for example, Thor, they hired us for a 200,000 square foot agency in Midtown in their headquarters. All right, so we got to move 25,000 feet of office space in the worst office market in American history. What do we do? So let's push it on social. Let's throw an event. Let's make it exciting. And I'd like to say that's probably 50% of where the social media desire comes from. I just want to do a great job, and I want to have fun. So I think you guys are onto something. I wish you a lot of luck, and I think that you should definitely continue. And you had some awesome guests that are friends of mine, and we talk about it. And
it's cool.
And that enhances your brand significantly, because there's a lot of people that are in their 20s and 30s that are interested in what we're doing on a day-to-day. For us, we just take black eyes and LOIs that are too low and sellers that are too high, and we're so much in the game, we don't zoom out, and there's a 24-year-old that's just like, dude, that's what's a cap rate, like how do you underwrite that, what is, I have no idea what you're talking about. And those are sort of the viewers that are pretty awesome also, because they want to help.
Yeah.
And you'll see, you guys will get a following for sure. You already do outside of the industry, and that's when you sort of hit sort of the masses, if you will, a little bit more. And so yeah, I mean, we're on social, but we do other things. Today I want to talk about an ebook. That's why I'm here. It's called From Fear to Fortune. It lives on, you could go to www.fromfeartofortune.net. It's a free ebook. The reason I did this is because I was interviewed by NBC, multiple media outlets reached out and wanted to understand what was happening in office. And, it's definitely headline and splashy news that office use is down, office, commercial real estate, there's a debt bubble coming. There's all of this unhinged fear about the future of commercial real estate. And that's why I wrote this paper. And I took all the data on CoStar from 1993 to 2022, December 31st, and I tracked all the cap rates, and I tracked all the interest rates, and I tracked all the price per foots of Manhattan properties below 96th Street. This came on the heels also because there was a NYU professor that wrote a paper called The Office Apocalypse. And I did like his research. It was really interesting. And a UC Berkeley economics professor reached out on Twitter and was like, hey, let's co-write something about this paper in response to this paper. And he's an economics professor from UC Berkeley. He has like a PhD. So I was like, all right, if we're gonna do something, let me really dig in and create data. And so long story short is that yes, office is an asset class that is very troubled, just like retail was during the retail apocalypse.
Yeah.
Maybe still is. But the truth of the matter is, I have not seen prices decline to some of on the Class B asset class and Class C, middle market, $10 million to $150 million price range. We're talking $300 a foot, $400 a foot. I haven't seen this. I started right after 9/11. I haven't seen this in that era. But I did see it in 2009. So, rewind the clock 14 years. And that's the last time we've seen pricing, even here in the financial district, 25 Water. The Gorals are doing the biggest office to resi conversion. They bought that for $220 a foot.
Mm-hmm. Yeah.
I mean, that is just insane. And they're office landlords, and they purchased that and are repurposing it using tax credits for the downtown market. And they're building America's biggest office conversion in history.
I mean, $220 a foot. It's in the money though. Like that's what I heard. You have to be like under 400 to make money in a resi conversion for office.
I would say for something that large, correct. Yeah. But not all. I don't think that. How many buildings in FiDi are going to trade for $200?
Not a lot.
And
No one's going to sell for
How many
$200.
office buildings are like equipped to actually get converted to residential? It's tough with like,
it's
the
not
layouts.
even equipped. It's a major construction.
Yeah.
So really quickly, it's like a 200 by. It's like I forget what the dimensions are, but they have to drill 2 light wells all the way down, and they're going to take that square footage and put it on top.
Yeah.
So this is not some kind. I mean, you need like real engineers, structural engineers. And,
and the windows too, right? Like I feel like a lot of these office buildings, like, is it weird for a residential life, like to have these windows are scattered out? Like here, if you were to build this building into a residential building, I mean, it'd be weird.
It would be weird.
Well, this one at least has good windows. But some of these old office buildings with the tiny windows and all the bricks
Like
everywhere.
I live in Tribeca, and a lot of obviously I love living there, but a lot of this is like industrial space.
Sure.
And it is awkward, like the light. It is awkward where you have the windows in the front and the back, and there's not a lot. I mean, these buildings were built for industrial use, and all of a sudden you have all these people paying all this money to live in them. They're not set up for
Just think about $225 a foot for vacant product in Manhattan.
Yeah.
Compared to, I mean, what do we sell vacant product for in good parts of Brooklyn?
Selling land in Williamsburg for $400 a foot.
And that's dirt. But no, we're selling.
I mean, what's a vacant building going for?
I mean, it depends where it is. I would say really rough numbers.
Awful condition.
Awful. What location?
We'll say
Amazing?
it's in a location in Brooklyn.
We're selling deals for $800 a foot that need complete guts. We're
$225
doing one
a
in the
foot
Brooklyn Heights right now for $1,000 a foot that needs a gut.
How much a foot do you think they're putting in for construction of this thing? Like, is there any way of quantifying
like
that?
$600-700.
Yeah, $600-700 a foot.
Yeah. Also, at the same time, it's a 1.1 million square foot property. Yeah. It's hard to compare that to a 30,000 square footer.
Yeah.
As far as price per foot. With the credibility, with the ability, the surety of closing. So it was a JV with them and Metro Loft and a large private equity fund. Yeah. So everyone are A players, A game. But going back to the book, the reason why I wrote it is because I believe that this, for anyone in their 30s, 40s, we haven't seen this since 2009, and the average economic cycle is probably 7 to 10 years. I think this is a once in a generation opportunity if you're able to, scoop in and buy good product. And that's not only for office though. We're seeing discounted residential. You guys, I'm sure you're seeing discounted resi, where because
retail too.
Retail's a sleeper. I think retail has been so beat up.
Yeah.
Like,
it was beat up prior. It was beat up prior to COVID.
like slashed and burned, rents down. Broadway, Soho, Main and Main, Spring and Prince. They were like 900 to 1,000 a foot for rent.
Yeah,
now they're at 250. Right?
Yeah.
Which is ridiculous, like $900 a foot.
It
How
was
do they make
ridiculous.
None of them
totally
make money,
ridiculous.
right? Like,
I mean, no, people were paying that. I mean,
no, I know they pay that, but the businesses are like losing money on this, right?
That's so the interesting thing about Main on the Avenue retail corridors is a big percentage of that is marketing.
Marketing.
It's marketing. You made it. You're on Fifth.
Yeah.
Dolce & Gabbana, and Versace, they're paying monster bucks because that's a global brand and they have to be on there.
Yeah.
They're a player.
They have to be.
Uniqlo, the Japanese clothing manufacturer, they had to do that to make a global statement. Mm-hmm. They spent $1 billion. I think they closed most of their locations.
Yeah.
34th Street, Fifth Avenue, and was it Soho, right? Bam, bam. I mean, if there's ever a billboard, and you're paying millions of dollars a year, but you're a $3 billion in revenue company, it's advertising.
Yeah, like the Nespresso store in Soho, I heard is like the biggest loser. I mean, they can't make it, but I know what it is now because of that store. I mean, for sure. They're selling little pods, and what are they paying a foot there? Exactly.
And so Times Square, also, that's all advertising.
Mm-hmm. Yeah.
They're not making real money, you know. Whoever's there, all those stores. Those are just global brand recognition. I made it. Now the world will pay attention because it's all eyes on Times Square or Fifth Avenue.
Yeah.
So I truly believe that this, and if you look at historically the cap rates and the spreads between interest rates and capitalization rates, I think that there's a huge story there. I mean, for us in the biz, a lot of people don't give a shit about cap rates.
Yeah.
What is the story?
I believe that this period there may be some negative leverage, but for those sellers that understand, like I gotta sell at a 6.5 cap, I gotta sell fully leased, multifamily, cash flowing. I have to sell. I have to get out. Market's probably 5.5 to 5.75% in Midtown Manhattan. Mm-hmm. It's not 4. It's definitely not 5. Yeah. Because there's no juice. There's no juice left.
Yeah.
So for anyone that has ever been looking for real unlevered yield or real capitalization rates or price, this is your market. But a lot of times those are family offices that are billionaires and they wait for this and they've just been doing it once a decade and. This is what they do, and they'll buy 12, and then they'll hold, and then next decade they'll buy another 5.
It's true though.
But this is the wealth creating. This is the wealth creation part of the cycle, even though it's the most painful. And Warren Buffett said it the best. He's not in real estate because he has a C Corp structure. For tax purposes, it makes no sense for Berkshire Hathaway to purchase real estate. They can do the Berkshire Hathaway homes, but he said for those people, the best time to get into real estate is when all liquidity is pulled out. And so what we're seeing here, with Signature Bank gone, with First Republic. Do you see First Republic today? I mean, the story is just getting worse and worse and worse for them. Yeah. They survived. They got the FDIC backdrop, but their stock is down something like 85% from 2 months ago. Mm-hmm. So it's a real troubled story. And so all liquidity in this market has been pulled out, a lot of it. And the institutional players, that do have capital, they're not going to issue. They don't want to touch anything that has less than a $50 million check. Because it's just a waste of their resources and so they're not, running after $10 million, $20 million checks. So in my opinion, and I wanted to put this out there for two reasons. One, let's see how office does over the next decade. I think that it is changed forever, but I don't think it's as bad as what everyone else is going to say. Sure, we're going to have over 10% vacancy in general. Maybe we'll have 13%. And rents have come down. But just like retail, people are going to start using space. They're going to convert these offices. They may change some really crappy offices, maybe back to warehousing, because in warehouse, self-storage is hot.
Yeah.
So we're going to see that. We're going to see residential conversions. We're going to see all that. And then the supply of office, I think, is going to come down. And then it's a supply and demand. But it's going to take a few years to work itself out.
Yeah, what do you see, outside looking in, in the office market for me, Midtown? I'm in Midtown. I go to, I'm in the 50s, prime office. And I see all the lights are off, right? It's empty, right? But those are serious grade A office buildings.
Sure.
Those are not really convertible, I would say, right? Because they're worth so much money. Then you're down here, there's tons of office.
Sure.
You have Hudson Yards, which is a big office area.
Yeah.
So I feel like there's so much to
I feel like
absorb.
it's Class A though, then there's everything.
Yeah, but
everything else.
But even in Class A, the story is that it's still a challenging time to create rent revenue. Oh, you're absolutely right. I don't know.
Yeah.
That's the truth.
And how the conversion's going to go, right? Obviously, one wall over here, I heard not great things about that conversion. That was a big conversion. It's a nice-looking building, too, and they still couldn't make it work.
Yeah. So 3 things can happen. One, they have no debt on the building, and they just sit there, right? So there's a lot of landlords, maybe not in the Class A, 1330 Avenue Americas, right? B, they give it back to the lender, and they're like, you know what? Our time's up. We're not chasing good capital after bad.
Yeah.
That's it. And let the lenders worry about it. Or C, it gets converted. I don't know everything else in between, Or it gets filled. I'm sorry, 4. Or it does get filled because after some point, someone's going to be like, all right, we just need to break even. So we were getting $90 a foot. We'll take 50, And it's hard, though, in Midtown to find 4,000 square foot Class A space for $45.
Yeah.
It's hard.
What office market do you think within Manhattan it was hit the hardest by the pandemic?
Statistically speaking, the Penn Station area was negative in all of 2022 was negative 1.1 million square feet. Of net absorption. So Penn Plaza, that district has been performing the worst. I think that
makes sense.
Yeah, unfortunately, I think it was closely followed by the financial district, but clearly Penn Station, the West 30s were hit the hardest. That also does include Hudson Yards, even though. KKR took the balance of whatever Facebook wanted to take. There was definitely a lot of vacant space in the West 30s. So negative 1.1 million square feet. I think the real feel is a journalist reached out today is what's really going on? So here are the real numbers, in my opinion, we have a portfolio, 2.7 million feet, 50 buildings, mostly Class B, Class C stuff, all in Chelsea to Times Square. That's really our sandbox. So definitely probably plus or minus 20% vacancy. That's a real thing. And the rents are down, I would like to say, on average, about 26%. So when you have a 20% vacancy, plus you have negative 25% in revenue, it's a complete market reset. You're completely reset. Anyone that bought in the West 30s for a side street Class B building for $650 or $700, someone paid $1,000 a foot side street office. On 38th Street off 5th Avenue. Yeah, those are $350 to $400. So, you know, the average really was $650. There were outliers that paid $800, $850, and $1,000. I think there's only a handful of those. But yeah, we're talking half. You know, bam, half the price point.
Wow.
That's based on vacancy and rents, like just the combination of those two, or is it like the real estate taxes? Like in multifamily, we have a lot of like operational expenses, like the heating and insurance and real estate taxes that are just eating up at all like the cash flow in the property, which is really hurting values when rents can't go up. So here you have rents going down so much, you have a lot of vacancy. Is that a contributing factor?
It's a perfect storm. Taxes, as I was saying, from 2009 was the last time we saw values at $350 to $400 a foot, but taxes like tripled. So you're absolutely right. Yeah.
I believe that.
I mean, it was.
Is there like a metric for like real estate taxes on office buildings, like a rent per foot, or
today round numbers? It's $10 in the upper West 20s, and but I would say anywhere from $8 to $11 a foot. Round numbers.
Is it based off income or?
It is based on income. RPIE.
RPIE's got it.
But the problem is. So you reported 2019, RPIE. It crashed in 2020. It's always a 12 to 24 month lag. And if you're not on the ball, and if you don't fight it or contest it, then your taxes stay the same. The problem is the city's not so fast to lower their taxes. Real estate tax is 55% of the city's revenue. So you're telling the city, and there's a deficit. You know, there's a couple $1 billion a year of deficit. So, so the mayor and the governor, and they have to ask the federal for federal assistance and all that stuff. So it's definitely a bleak time, right? But what does that mean for smart, hungry people in real estate? This is your opportunity.
For sure.
This is your time to tell the seller, dude, you have no idea. These are our offers. Here's 8 offers that are saying your property is worth $700, right? You will not move off of $800 a foot. What are you waiting for? Okay? Do you think the market's going to improve in the next 12 months? And if not, I think, because no one knows.
Yeah, no one knows.
No one knows anything. That's when the sell comes. And you're like, this is what I think. Okay? I think we're going to plateau for 12 to 18 months. I think this is going to be a lot longer and harder than what people believe. Okay? Yeah. So what are your values? What are you going to tell? What are you going to say 18 months from now, 2 years from now? Okay? You have a maturity coming. Okay? And I don't want to spook you, but this is what I think. I think you should get out. I think it's going to get worse. Or look at the national debt. There is no way that we are going to stay at these high interest rate levels. It's impossible. The government cannot sustain these levels to pay its own debt.
Yeah.
The interest rates have to come down. And once they come down and you bought at $800 a foot, which is a 20% decline from the peak, now you're talking to the seller, the buyer.
Yeah, of course.
You're 20% below. You're in, the best market that you. How long have you been looking to buy in this market? Okay, how long have you been looking to buy? You have a 20% discount. I'll try to get you a little bit more, but this is your shot.
For sure.
Let me tell you. So. That's when it's sort of like, that's where the gauge starts. When it's like, these are offers, no, okay, goodbye. You could show space and show buildings all day long and get 9 offers and they're all $700. Your seller wants $800. How do you gap that? And there's different philosophies on that. Bob Knackel, who I love, he's a great friend of mine. He's basically all about statistics. So he's like, let me tell. I'm not gonna imitate you, Bob, but basically he'll start talking about the market, the overall market. He'll talk about comps that have traded. He'll back it with data. These are the closest comps, And this is why I believe that this is the right price. And this one purchaser right here, based on everything that we've done in the last 4, 5, 6 months for you, this is probably your highest and best chance. You know, and you know, so that's his approach. Another approach is just, you know, stating, you know, pure salesmanship. You gotta exit. You gotta exit. Fear mongering, right? So this is and this whole philosophy actually came from Barbara Corcoran, who's a huge mentor of mine. And she and my mom was a competitor of her. My mom's was at Douglas Elliman for 42 years,
Wow.
and my mom was probably top residential broker of the city in the 80s and the 90s, representing all the Fortune 500 Japanese C-suite for their residential. And so Barbara Corcoran's philosophy is basically, when the market is uncertain, that's when they listen. This is the only time
true.
that
That's a good
everyone's
point.
like, you know, Derek, what do you think?
Yeah.
Like, what, you know, what should we do? What,
For sure.
You know, and then you're like, this is what you should do. I think you should sell now, and I think you should give me a 6% commission.
Yeah.
Forget your 5. I need 6 because this is your Tylenol. Go to Miami. You're done. You know,
Yeah.
Isn't life better for you down in Florida, Fort Lauderdale? You have your home, you have your kids, your grandkids. What more? You know, what do you want? Here's the Tylenol. Take it. Take it. Just think about it. Just think about it. Because I don't think this is getting any better.
Yeah.
So
It's hard when emotions are in play, and unfortunately, a lot of times sellers are emotional.
I absolutely do think so. I
Yeah.
think it's an emotional thing. I think that I have clients and mentors of mine who will remain nameless that are over 65 years old. They've been building for 30, 40 years,
Yeah.
and they have health issues because of the amount of pressure and stress they have. And they're potentially going to lose everything. After 35 or 40 years of hustling and pushing and climbing and getting lucky and taking punches to the face and then getting back up. And, you know, this is that sort of market. But, you know, I mean, that's the game. That's the game. You know, this is all, and I tell my guys that it's hard and you do get emotional, but this is a game, and the points are your checking account or your net worth.
Yeah.
This is a game. And I you know, Monday morning we have a sales meeting, and we go over the week's calls. How many calls did you make? How many offers do we have this week? I ask them and I tell them, are you happy with what's in your checking account or your trading account? You know, TD Ameritrade, are you happy when you log in? Is that because this is a game, okay? What you put in, you will get out, right? So how many calls, how much money is every call that you make? Is it $100? Is it $20? Add it up.
Yeah.
And so for rookies, it's like $5. For senior people that have been in the industry 15, 20 years, it's probably hundreds of dollars a call at this point, if not thousands, you know? So it's really, really important to understand that you gotta love what we do even when times are really, really crappy. Because it won't last forever.
Yeah.
It won't last if you're stressed out, if your team is stressed, we're not doing sales, you know, I'm getting discouraged. You know, you got to snap out of it. You got to do whatever you throw a party, you know, tell the guys, you know, take 2 days off. Just go. You know, you're just moping around in the office. It's not you. It's not who you are.
Yeah.
You know, go get a rest. You're burnt out, you know. And but essentially I feel that this game of commercial real estate that we're all in is exactly that. It's a game. And there's so much to learn, you know, and with technology. It's a great game.
It's an unbelievable game.
It's an unbelievable game. It could be very discouraging, and it could be miracle makers.
Yeah.
Have you had a moment? Have you guys had an aha moment where you're like, oh, this was it? Like, how long have you been in real estate now?
So I started 2011 was my first like real year in the business,
Sure.
but I didn't start being an active broker because we had like when we started in the firm, we had to like do a lot of database.
Sure,
I
sure.
got on the phones probably the first month of 12, like
Okay.
seriously.
So it's been 10 full 11
Oh, yeah.
years,
Oh,
10
yeah.
a decade.
Yep.
So you just left I consider your first 10 years your rookie years.
Okay.
That's when you that's when you learn who you are. You're really learning the basics. It takes a good 10 years, right? This is the decade of growth. I think that this is a very, very exciting time. And hopefully, even if you started late, it's okay. But if you did start in your early 20s, I think that's the best time to learn. You know, if you were lucky enough to start early, even if you were a teenager and somehow you were dabbling, I think that's even more incredible. But your first 10 years for sure are your rookie years. And you're from year 11 to year 20, I think that is the hyper growth years, right? And that's when that's when you have to look at your statistics. We're just like players on basketball players. What's my closing ratio? You have to know your ratios. You have to know every time I show a building, I have to only do 9 showings before I get an offer. And then you want to try to improve that. You know, and you're always trying to improve different aspects of your game. Every time I go on a pitch, I went from 10 pitches to an exclusive. Now I'm at 3, you know, to an exclusive.
Yeah.
That's part of the game. So, you know, it's always just learning. And for me, I finished 20 years in the industry. And so I'm starting my 3rd decade. And this decade, I'm like, whatever it is that I want to think that I'm going to do, I got to do it this decade. Whatever that crazy concept is, whatever that dream that I ever had, you know, you make the, 6-7 figures in your first decade, or you're really learning. Your second decade, you got to start pumping out 7 figures. You have to.
Yeah.
Right. This is not a cutesy sort of situation unless you can consistently do after tax high 6 figures. That's also awesome. But why not push it? I think in your third after 20 years, you gotta start crushing, mid 7s a year somehow, some way. And I'm not saying that I do that, because some years it's like negative money, right? Not effective, especially for owners.
For
you
sure.
know?
So what is the thing you want to do in this 3rd decade? Like this crazy concept, or what deal are you?
Yeah.
Yeah.
So
is it an investment thing? Is it a brokerage thing?
For us, it's definitely 2 things, right?
Yeah.
Our brokerage, I definitely want to scale that up. It's also about my staff. It's also about my team. I want now them all, and I challenged all of them. In December of 22, I was like, this is the year of the breakthrough, and I unveiled my vision for what the team is. In the next 3 years, I'm giving someone $1 million. I want to give 2 people and our firm is small, is a third the size of yours. We're 13 people.
Okay.
Out of the 12 other people, I want to make someone a millionaire in the next 3 years. Mm-hmm. In the next 5 years, I want to give someone $2 million. And all of a sudden, people are, am I almost there? Where am I? Like, people start looking at their history, and I printed all their commissions, right? And I gave it to them. I said, how far are you? So what do you have to do now? I want to make you money. So I want to make leaders in my firm. I want to make millionaires, a few millionaires, and I want to make, for those that have that ambition, let's go look at and take down some properties. But so the brokerage, scale that 2x, 3x minimum top line, and that's in this decade. Larger equity as far as valuation of our firm, but then on the ownership and development side, definitely scale that. We probably from 2011 to 2015, we acquired $150 million of real estate, and mostly in Midtown in our sandbox.
Nice.
And that was all through partnerships and different things. And that was in my second decade. So knowing that, how do I use that to now double or triple my sort of passive income vehicle, the wealth creation vehicle?
Yeah.
But it's hard to do both. It really is, because you give everything to both sort of services. It's almost like running two companies, but eventually we want to be an end-to-end commercial real estate company, specifically in Midtown Manhattan, focused on that. End-to-end means find, fund, lease, sell, or hold.
Nice.
End-to-end, everything. And then sort of grow that equity within those buildings, and then the firm, and offer my guys, profit sharing and or equity, just, and I think that's sort of the plan, but you know how decades go, right? We had 9/11, 08, Hurricane Sandy, riots, a global pandemic, and now a monetary tightening. I mean, that's 6 pretty substantial things in a 20-year career. So I don't know about the black swans. I don't know about everything else, but I definitely believe in New York City. And obviously you guys do too.
Yeah.
So
What was the first deal that you purchased?
45 West 34th Street, 45 and 41 West 34th Street. So that was a 120,000 square foot office building. It's next to Uniqlo and Steve Madden. The retail tenants are Levi's and Levi's and Steve Madden are our retail tenants. Uniqlo and Victoria's Secret, it's sandwiched in between those. Across the Empire State Building, 13-story office building block through from 34th to 35th Street. Yeah, that came on the heels of doing I think close to $1 billion in distressed debt. And during 2009, in my 20s, we had the financial crisis. When the financial crisis hit, leasing just stopped. So whatever I was doing every single day just died. Phones died. Clients said, "I'm not moving." No one's doing anything. Everyone's frozen. It was similar to 2020, where everything just froze. And so I do what I always do when I'm confused or unsure. I call everyone that I know. Landlords, brokers, lawyers, and what are you doing? What are you seeing? What are you doing? And a couple of good friends of mine who are mortgage brokers says, you need to spend all your time selling distressed debt. That's all you need to be doing. I'm like, what are you talking about? I don't do that. I don't know. But, after I knew all the players.
Yeah.
So I knew all the players, and then I had to convert non-distressed debt purchasers that are traditional landlords into buying distressed debt. So I went to the local landlords, and I had to educate them, and they were like, I need to loop in my lawyer. We've never bought a distressed foreclosure from Lehman Brothers. What are the implications? How do I know? And then so it was a fast education, but ultimately we did a couple of monster deals. One was a Lehman asset, 1466 Broadway, and the neighboring lot, 140 West 42nd on the corner of 42nd and Broadway. That was a $400 million Lehman asset, a $500 million project, and I sold it to Crown. Stanley Shearer, who recently passed away, sold that to him for $217 million, and
That ended up being like a home run for him too, right?
it wound up being an absolute home run. Here's a great real estate story. I sold it to Shearer, Highgate, and their private equity partner, and they built the project next door, sold that off, converted the Knickerbocker Hotel upstairs into condo, so it was hotel upstairs, retail downstairs, and Stanley and Crown owned the entire 30,000 or 25,000 feet of 42nd Street and Broadway retail condo for nothing. And I see him, Stanley, at an office building on 5th Avenue randomly. And I say, Stanley, it's Chris Okada. I sold you 1466 Broadway. I always do that. I always remind me, I sold you this because you speak to 9 million brokers. Even though we did the deal together. And he goes, Chris, that was the best deal of my life. I made $250 million.
Jeez.
In 18 months. $250 million.
Yeah.
And, I made a 6-figure commission after taxes and a couple of, congratulation parties. There's not much. It's not $250 million. That was the turning point for me. Because at that point,
That's when you realize you need to start buying.
yeah,
Yeah.
that's when I was
It's a
like,
good wake up call.
Yeah.
I was like, holy shit, and that's probably, valuation. I don't think he paid any taxes on that because his cost was 217 and blah, 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 blah. And I just did the quick math and I'm like, I think he just made, I think he did make $250 million and didn't pay a lot of tax because of the condo structure and because of the cost of closing and the amount of money he made. And he really didn't earn any profits because everything. And then I was just like, and that was my third distressed deal that I had sold. The first one was 960 6th Avenue to Hid Rock on the corner across Macy's on the corner of 35th Street and 6th Avenue. Same thing, I made it. It was a 6-figure commission, and that one took a lot longer, but they bought it for 40, and they I think he exited at 110 million, something like that. Jeez. And he was 32 years old when he did that. 30, like he was in his early 30s. AB Hittery.
Brokerage was so much different back then compared to today. It's crazy. Even from when I first started in brokerage in the very end of 2013, early 2014, and just to see how much has changed from then to now.
Oh,
it's
yeah.
like it was like the.
But
wild,
what are you
wild,
seeing?
I mean, I just think that brokerage as a whole has become, I guess, more. I wouldn't say like institutionalized, but it's become more corporate somewhat.
Yeah.
It's become you can't just back when I first started, there were so many brokerage shops.
Yeah.
Who just like would put things on like a Word
Yeah.
document
Sure.
and make cold calls and try and sell deals. Now
Yeah.
like to win business, you have to really be able to market yourself. You have
Sure.
to be you have to be presentable.
Yeah.
And you have to be able to. That's how you gain trust in the
Sure.
client. Back then, no one really cared. It was just like, yeah, here's my rent roll.
Yeah.
Give me my price and. Give me
Yeah,
a call.
it's-
Give me a call if you can get it done.
That is true. There's a lot more. I mean, do you guys do your clients ask you for your underwriting? Do they require a full underwriting?
We give like our opinion of values,
Yeah.
which encompasses underwriting. A lot of these people want numbers and they
Yeah.
look at it. Like depends who the client is.
Sure.
The more professional the client is,
Yeah.
syndication, the funds,
Yeah.
they're definitely looking at our underwriting, and
Yeah.
they'll definitely have. We just listed 2 deals for funds, and they had comments on the underwriting. They had comments on the proposals. Most mom and pop owners don't really have those comments. They do.
Yeah. They're just
They're
like,
ignoring,
oh,
right?
it's $500 a foot. All right, offer $450.
Yeah.
Right. But yeah,
We're just providing a lot more information to the client.
It's also-
now. Sales reports.
Yeah.
Monthly comp reports.
Sure.
All this stuff, because that's how you gain trust in the client is by providing them value and
Sure.
and
Lots
so
of
forth.
visibility and rinse and
Yeah.
repeat.
Yeah.
Right. Lots of, but it's all discipline
Yeah.
and it's all part of the game. And if you're able to do that,
Yeah.
then your audience will grow
Yeah.
and your dollars will grow.
I used to work at a shop where it was kind of every man for himself.
Yeah.
And there were guys who were older than me, probably like 10, 15 years older than me, that were ripping some pretty big checks.
Yeah.
Selling, retail condos in Soho for, $50 million. And once the brokerage industry changed and it wasn't.
Were you at RKF?
No, I was at a company called, it was Itsaki Properties and it turned into Epic
sure. Yeah.
Commercial Realty.
Yeah.
And once the brokerage industry changed, they couldn't really keep up with it.
Yeah.
They weren't able to change the way they did their business, and now they're doing something completely different.
Yeah.
So that's how quick you can go from having $1 million commission to $0.
Another thing that really changed, I noticed even when I started, when we
Sure.
started, I was at Marcus in 2011, 2012. The transparency of the information, like the services we had to get phone numbers was bullshit. Like we had this thing called Merlin. I remember you were lucky to get a Merlin. You remember?
So bad.
You were lucky to get a home phone number.
Yeah.
Emails, forget about it. Cell phones. So like it was actually it was kind of fun because my buddies and I, like, if we couldn't get someone on the phone, like, we were going out to see if they're collecting the trash on the weekends, and we were doing things like that. Now everyone can get cell phones, so the competition is even greater. Everyone's at every deal.
Yeah.
There used to be like a thrill in the kill back in the day to like get, if you got someone on the phone that was hard, like you knew, like if you did something crazy to get their cell phone, like someone else in the office wasn't going to get it. So now everyone, it's so transparent.
Yeah, it's
it
kind of hard
definitely
to
is.
undersell in today's market with the amount of information that's
Oh,
out
the
there,
information,
like, readily
especially
available.
New York.
Yeah.
Yeah, I think that's a bad thing and a good thing. Why is it a good thing? Because, okay, so it's a level playing field. So why are people still able to make $20 million selling investment properties, and other people had their worst year, negative, they didn't do a single deal, So it's really interesting. I think it's a science a little bit. There's just different ways and different styles and different cultures of doing it and different specialties. I don't know. I think it has changed a lot. It has, because now everyone knows about selling distressed debt. Before it was like, what? You had to explain to owners that, there's a way to get to the fee. It's a deed in lieu. Bring your, so there was an education. But now there was $229 billion raised in 2022. Blackstone just announced for distress in real estate in North America, and in 2009 there was $80 billion. So we're seeing a 4x in private equity capital that is hip to understanding that there's distressed debt, and that's a way to unlock value for your fund, and same as the debt funds. In 2005, how many debt funds were there? It wasn't. But now every operator has a debt fund.
It's true.
Literally every family office. Oh, by the way, if you need any debt, we're doing debt now.
Yeah, it's
right?
true.
We talked.
I guess I had a couple last questions.
Sure. What's
so
up?
Work from home.
Yeah.
Like,
Okay.
Good question.
So I believe that work from home and remote work is here forever. One of our earliest clients, big shout out to Dane. He started a company called Odeco during the pandemic. He scaled up very, very quickly. He had, I think it was a Series B, just closed, over $50 million. And he went from 0 employees to 600 in less than 2.5 years. So he has 600 employees. And I had a Zoom with him like 6 months, 12 months ago. And he's like, we have a 2,000 square foot office. We have 600 employees around the world. So I think that's where the world is evolving to. Okay. So I definitely do think that there is a very, very big shift in the way we use space for office. I think that the footprints will be cut and slashed significantly in the tech sector. I think that finance and real estate, though, still has a high level of coming into the office. I think you'll see that your top producers are probably in the office 5 days minimum.
Yeah.
Some people want to come into the office on Saturdays, which is also fine. But I truly do believe that it's changed forever, and with that, valuations forever. However, all the office buildings that we represent at one time was manufacturing. C of O's for light manufacturing, storage, and so once upon a time, all of Chelsea and all of the fashion district was exactly that. It was the fashion district, and lots of sewing factories. And the first building that I ever worked out of was 551 Madison Avenue. It's on the corner of 53rd and Madison. It used to be Lacoste Fashion Company's headquarters, and we had a floor My dad had a floor up there. And I never understood why the ceiling heights were a little bit lower than some of the other buildings. And I found out that it was a hotel. So at 22 years old, 23 years old, that was the first understanding of that the use of real estate will change. And it will change again, and it'll change again. And it's a painful evolution is very painful. It's very, very painful. Retail apocalypse, very painful. But, the stores, if you walk down on Soho and Broadway 3 years ago, it was completely empty. Or 30% of the stores were vacant. Now it's all full, right?
Yeah.
I believe that work from home is here to stay. Mm-hmm. And so if you are a office maxi, and you truly are like, oh, we're back to 2019, 2018. I don't think so. Mm-hmm. I think rents will be down 25%. And, it's the average lease is 5 to 10 years. We started in 2020. So, we got until 2030 to really understand
That's a good point.
What happens. There's a lot of tenants that take 1, 2, 3 year leases and whatever.
Yeah.
But a bulk of the tenants in Manhattan that are mature, that took 50, 100,000 feet, those are not 5-year leases. Those are 10-year leases at a minimum. Mm-hmm. So the leases that are rolling right now, a bulk of them are from 2013. So, and that's for companies that have credit, or from 5 years ago, 2018. So that's what we're seeing right now. It's going to be unraveling. I think that this is an evolutionary period. I think it's going to be painful. I think values are down. But if you're able to acquire at these low levels and figure out a way to make income, and when I say income, it's got to at least pencil out to a 6 cap in today's market, 6.5. Other people think it's got to be 150 basis points above debt, which is 6.5. So people are saying, "Oh, my minimum is an 8 cap." I'm sure. Do you have buyers that are like, "We're looking for 8 caps"?
Yeah, but they're not buying.
Yeah, they're not buying.
We're looking for 8 caps, guys, in prime time, and it's sort of like, well, other people believe that it's going to be par with. Let's take multifamily. You can get a loan today at 5.75% based on 65% LTV, and that's where people feel the cap rates should be. Mm-hmm. 5.5 to 6%, somewhere in that range. I don't see 7 caps in Midtown Manhattan. I don't see that. I may see 7 caps in retail condos that are small or kind of side street or nothing really interesting, maybe. But as far as fully cash flowing, free market apartment buildings, you tell me. What are you guys seeing? Like,
I agree with what you're saying. We're seeing. It depends on location, right? Everything is location, and if there's value add, if it's like finished product, all that stuff. But for finished product, like we're seeing stuff in the high 5s to 6 cap.
Yeah.
And then there's obviously funds paying at higher, but they have different debt situations.
Yeah.
Value. It's really hard to look at a deal under a 5.5 cap, even if you're adding value. The interest rates are too high for that.
Yeah.
Right? Do you agree?
All of our stuff right now is 5.5 cap.
Yeah, and that's like
is that an
stuff.
ask or a take?
A lot of it is an ask.
That's an ask.
Okay.
But you're seeing stuff like in Bushwick, like stabilized stuff, rent stabilized, the whole other market, 7 cap.
Yeah.
I've seen a ton of 7 cap deals.
Do you see those rent stabilized 7 caps?
Yep.
Is that is there a market for that? Like, that's such a compelling story, even though it's a depreciating asset.
Well,
do you have are people buying? That is compelling. If you could borrow at 5.5 and you have 150% base, 150 basis points above that, and
yeah, if you could borrow for 5.5, it's somewhat compelling, and I think a lot has to do with like the condition of the building.
Sure.
If you're buying a rent stabilized building with today's laws, like if the building's not clean, if there's violations, if there's tenant issues, paperwork, people want it clean. So I think it's compelling if it's a 7 cap and all the other everything else matches up.
That's hard.
The buyer
though.
pool is still small.
Yeah,
it's small.
It's still very.
These are small deals too.
Yeah.
Listen, you're saying that, a 1.5 above interest rates is compelling, but That's
I mean, the bigger rent stabilized stuff eventually gets to a point where it's just like price per unit, price per foot. It gets to low enough where it's
Yeah.
just like,
Yeah.
yeah.
It's always been about that, right? Like when the laws changed, there wasn't a lot of upside in rent stabilized. Like when rates were 3, you could get 4.5 caps, maybe 5 caps, right? It was
Yeah.
always about that, 1.5 above interest rates.
Yeah.
You kind of have to be there.
It's not there right now.
It's not.
No, it's definitely
No.
not.
Where is it today? What do you think?
Well, it's just there's not that big of a gap because sellers aren't going to sell.
Oh,
at
they're
such
not.
low prices.
Oh, yeah.
so
Yeah, they're not going to take 8
Buyers
caps.
are getting very compressed spread, I guess, between their interest rates and the cap rates.
Sure.
But I think buyers are for certain assets that they like, they're pulling the
Yeah,
trigger. They
location
want
and
the long run.
clean, rent stabilized is still a good play.
Interesting. I didn't think of that. I mean, a lot of people are just that I speak to. They're just like, there's no end to it. Let's, just go to New Jersey, go to Connecticut.
Yeah, but there is an end to it. I mean, if we're talking about rent stabilized,
Sure.
I don't think you brought up office being
Yeah.
this is the worst day it's going to be. It's pretty damn bad, right? You have
Yeah.
interest rates really went up.
Yeah.
The laws changed in 19. It's all about tenants, not about landlords.
At least office, you have freedom to do what you want.
Expenses are up, taxes are up, water, sewer is up, everything's
Yeah.
up. And things could change, right? Like maybe there's going to be a hefty rent increase. Maybe they change the rent stabilized laws a little bit, right? Maybe it's
Yeah.
easier. Maybe you get a vacancy. Maybe you can bring it, you can renovate it and bring it to market, and then it's stabilized at that rent. That would be good. And other states are doing that. So there's a lot of things that could change that make it a lot better. Right now, I think it's how does it get worse? I don't want to say that, but
As far as rent stabilization?
yeah.
So, I mean, I don't know if existing rent stabilization, I mean, that's a whole other subject matter. But, I mean, what about universal rent control?
Yeah,
I mean, that's, right? They did that.
That
I
wouldn't
mean,
affect rent stabilizer.
it won't
Yeah.
affect that, but it'll just, it'll just tank the entire. I mean, are your clients worried about that? No.
Nobody's worried about it.
Go.
Interesting.
It never comes up.
Okay.
I mean, it wasn't passed again, right? It was left out of
Yeah,
the housing
it
bill for
was
this year.
definitely
So, like,
passed.
every year it's not going through. People don't have any concern over it. In fact, there's a number of landlords that kind of want it to happen. They think.
Really?
Yeah, I don't really recall the thesis or the theory behind that, but
We want control.
Yeah.
We want our private
well,
property controlled.
I think that their thinking was like their rents are at market anyway, and like
Yeah.
based on like the 1.5% CPI increase or whatever like the increases are, like they don't really think it's going to impact their ability to raise rents.
Yeah.
Yeah, I forget what else they were excited about within it.
Yeah, I mean, it's
but,
not everyone, but
Sure.
Some people are cheering for it. Actually,
yeah, no, I know you're right.
very
That's
smart
wild.
investors.
I have a quick question about going back to office slightly.
Sure,
How,
yeah.
and I always wonder about this, like even with our lease here. Now,
Yeah.
How are office landlords gonna negotiate with people? Like, what is their stance? Like, obviously everyone knows the news and that
Yeah.
they're not looking so hot. So, like, when a tenant plays hardball with them, they negotiate. Are they like throwing in the towel? Obviously, it depends on their debt structure, but are they like fighting back and saying, "I'll leave it vacant"?
So here's what I can tell you. We're up to like 40, probably 45 deals this year so far, 45 leases, and this is Midtown, mostly Class B,
Okay.
some Class C. I believe this building it's probably a Class A building, but really.
we have a koi pond in the
Yeah,
lobby.
it's
I don't know
amazing.
how much
You
that
got a
adds. That's huge.
waterfall. You have
The
a
waterfall's
marble
big.
waterfall, guys.
don't know what the water bill
marble
is here,
waterfall.
but-
You guys got to come check this
Yeah.
place out.
Huge fish. They're massive.
Very good question.
Thanks.
So what are tenants doing, right? You have to create a compelling story. No one, whether it's a 20-person company or a 100-person, no one wants to go and buy furniture, right?
Correct.
So you got to compete with sublease tenants that are subleasing space. Try to furnish it, People they don't want to do construction. They don't want to buy furniture, and they just are not patient right now. So this is what they do want. They want a good deal. They want you to build it, and they want it furnished, and they want it easy.
That's what we got here. I loved it.
If you can provide that, and they know the rent, and they will shop the market, because people still in office today are not providing what tenants want. It's wild.
Yeah.
It's like, go buy furniture. All right?
money. It's money
been
though,
on the
right?
market for 12 months, 18 months. maybe just furnish it. You know, it's, you know, these are custom desks, I think, so each one could be $1,000. Let's just say, for example, a chair, a couple hundred, but 1,200.
No, you're right.
Let's say $1,000, right?
Yep.
It doesn't have to be custom because you don't know if they're going to be like, oh, this is, you know,
Yeah.
cut this out, throw that
Get
out.
some standing desks.
Get standing desks.
Yeah, or
spend
what do we see
$300
today?
bucks
Yeah.
a pop. You know, and then get spend 15 grand.
And the
Okay,
technology fees, all the wiring, all that stuff costs so much money.
costs a lot, but that's the cost of doing business today.
But what are landlords? So obviously they could be doing this to improve it, but
Yeah.
they've got to have. They must have like hard conversations right now. Like
Well, like
I
if
know.
if they have a tenant on the hook and the
Yeah.
tenant's shopping between like a couple places
Yeah.
and like
Yeah.
obviously they have the rent that they want to hit, but they also have vacancy in the building
Yeah.
and rents are down and like
Yeah.
tenant has a lot of options.
Yeah.
Like are the landlords just conceding and like pulling down their pants trying to get these tenants, or are they playing hardball
it
and
dep-
kind of pushing away tenants? Or are they willing to like
Yeah.
lose a good tenant?
Like they want to start
Yeah.
that kind
because
of
they couldn't pull them in.
So two things. Number one, I do think that
All right,
it-
Justin.
Justin's
Yeah, thank-
leaving?
Yes, yes.
Yeah.
Thank you,
Any
Justin.
last words? You got to look at the camera and say something.
It was a pleasure. It was a pleasure.
It was a pleasure, guys.
Yeah.
Okay. I'm sorry.
Thank
I gotta
you.
go home.
Okay, we'll see you.
It's a very fair and good question. I really do think that their representative and the landlord rep has a lot to do with it because it's about conveying what the tenant wants. Sean Black, are you familiar with Sean Black? He's a great tenant rep. He was at every major company, Cushwick, JLL. Went out on his own. It's called Black, and he just did Alexander Wang, and he did at 45. 40 Wall Street. He did Judah Strauer. What's Judah? J Suites.
Okay.
He did a couple of, pretty high profile office leases. And in one deal, they paid over $100 a foot, turnkey. It was
Nice.
down in Fidei, down here. I forget the address, on the water. And I mean, you could get Class A space for like $50 here, right? But he got $100, and they're going to custom build it, and they're going to do that. They have 100 million feet to choose from. So
sure.
I really, I think it's building by building, landlord by landlord, broker by broker, and just conveying value. You got to be able to do that. If your broker's in Westchester or in Greenwich, Connecticut, working out of their living room and they're comfortable and they're 10 years or they're 8 years, they're looking at retirement. They're like, I'm going to retire in 5 years. Let me just scale it back. That's not. They may have a big name behind them, but that's not necessarily the broker that's going to bring home the bacon for the landlord. So Sean Black is a great example, and he says, this is the best market of my career. I've been waiting for this. So it's interesting to get everyone's perspective, because this is his time to shine. As a landlord rep, we went from 1 million feet to 2.7 million feet in agency in the past couple of years. The reason is because of our value proposition in Midtown. No one's going to work harder. No one's going to have the branding thesis that we have, the social media wherewithal in office leasing, and they don't care enough. But I care so much. I want you give me your agency. This is what we're going to do. This is our business plan. Most brokers stop at item number 5. They make a flyer, they make some calls, they put it on CoStar, and and that's it. We brand it. We have PR behind us. We give it a digital presence. We have parties at your space. The amount of parties, we have 48 buildings. I mean, we throw a lot of freaking parties for the brokerage community in leasing. So that's essentially what you got to do. But in the end, the tenant walks in and he's like, you're building number 4 out of 15. I'm tired. All the spaces are they're blending into each other. They all look similar. And that's when you need a good person to show up and explain, this is why we're number 1 for you. And that right there, that care is what I feel adds 5% to the potential of making a deal. Everything is like 1%. You show up to every meeting, that's 1%, right? You create a website for the property, that's 1%. You push it on social, that's 1%. All of a sudden, you got a 10%. And that's exactly what I tell the landlord. Everything adds up 1%. I'm not a miracle maker.
Yeah.
All right. Rents are down 45% or 30%, whatever it is in Penn Station, and this is where it is. And some landlords are like, look, we're going to hold. If you're comfortable, if you've owned the building for 30 years, you have 20% vacancy, but your mortgage is, 25% LTV. You're like, all right, I'm not gonna sign a 10-year lease at $26 a foot. I'm not doing that.
Yeah.
Just breaking even. And then other landlords are a lot more hungrier. We're willing to do this. We're willing to do that. So it's really good to work with both, actually, because others are very, very motivated, and some are, they just want to top off and increase their revenue. I think it's very, very tough. I think it's challenging. I think, the rent stabilized brokers that sell RS product, and that's what they specifically did, or the RS owners are in a similar position as office. It's a perfect storm. Different reasons, but interest rates, and challenging environment.
Very challenging.
Yeah.
Yeah.
But what do you tell? I have a question for you.
Yeah.
I have a question for you. What do you tell your guys?
The guys that work here?
The guys that work here, right? What do you tell them? They're like, man, I literally haven't had a contract in 6 months. Like I see other guys are closing deals. It's just I don't know. I'm here. I'm coming in every single day.
Yeah.
I'm listening. I'm calling. I'm following up. Nothing is adding up. What do you tell them?
So I think it's just they have to buy into it's a long-term business plan.
Sure.
And I tell them to go get a proposal on someone that they think is going to sell in the next 1 to 3 years every single week.
Yeah.
And that's their job, is to go get these proposals.
Sure.
And sometimes you get lucky and you get a proposal and it turns into a listing and turns into a sale, and they get paid quick, and that's great, and they're going to make money. But in a way, I don't even care if the proposal turns into a listing and an under contract and they make money quickly. What I really care about is just a big pipeline of proposals over like a 3-year period.
Yeah.
Because then all of a sudden their business it's not based on luck anymore. It's based on like certainty
Systems.
well, it's just a level of certainty that like all these proposals that they put out there, some of these people are going to sell every year. We have countless examples where the guys in here are like, oh yeah, I proposed on the guy 2 years ago, listed it, sold it, boom.
Yeah.
I proposed on the guy 9 months ago, listed it, sold it, boom. So it's just a matter of like horse blinders on, being focused and consistent on. We focus on the calls, but I don't really care about the calls. I think the calls are honestly BS.
Yeah.
I want meetings and proposals with like highly like filtered out people in the database that they think are selling in the next 1 to 3 years.
Yeah.
If a broker in this office is getting discouraged after 6 months and they haven't gotten paid, and I get it, like we've all been there.
Sure.
But they have to buy into like the long-term nature and the long-term business plan that this business is. It's a relationship business. Just because you show up, month 1 or month 6, and you get a meeting with someone, like, they already know. They know other brokers in the market. They know the next door neighbor. Their cousin is a broker. Like they know some buyer that sent them a letter in the mail. Like the likelihood of them hiring a new broker, out of the gates is just it's very low likelihood. But you build that over time, and you make relationships, and you stay on top of them. So a lot of the people that have filtered out here, they didn't buy into the long-term nature of this business.
Yeah.
I think this business is automatic. I think it's a guarantee that you will make great money as a broker as long as you can be consistent in doing the proposals each and every week.
Yeah.
And then the follow-up with those proposals.
Yeah.
And not getting frustrated, not getting in your own head.
Yeah.
And if you can do that, I think over a 3-year period, you'll average out at like really solid income.
Yeah.
And then I think it's exponential from there.
Yeah.
I agree with what he's saying.
So that's really the message in here. I love nothing better than when people get paid quick and do deals like out of the blue, and like they make a call, turns into a meeting, turns into a listing, turns into a sale, like super quick. But I don't want to have a business that is dependent on just like right place, right time, kind of being lucky.
Oh yeah. I think there's
So yeah, I want to build like a real business based on real fundamentals, real systems, where it's a guarantee these people will make the money that they want to make.
Sure.
But it's really hard.
Yes.
You know what's so hard, and my big thing with some of the new agents is like we have these activity reviews on Monday mornings, and I'm like, okay, what are you gonna do for the week? And they're like, well, I'm gonna do 250 calls. I'll have one meeting and one proposal. And the next week rolls around, and I'm like, okay, what'd you do? They're like, well, I did 170 calls. I had no meetings and no proposals. And a couple of those weeks in a row start to add up, and all of a sudden, like you're not gonna have enough proposals in like this specific time frame to keep up with the amount of activity that's honestly needed in order to succeed in this business.
Yeah, these guys if that happens, they let themselves go home on a Friday, and that's okay. And it's not okay.
To give the example differently, like the agents, their goal is 50 proposals year one. And I think of the 50 proposals, let's say they're highly likely sellers. Let's say 20% of them sell.
Yeah.
So 10 of them sell, but like someone's gonna hire some other broker, someone's gonna sell direct, someone's gonna whatever. So they're gonna maybe get their hands on like a few of those deals year one. Maybe like 1 to 3 of those 50 proposals they'll get their hands on.
Yeah.
But now year two, they do another 50 proposals.
Sure.
So now there's a total of 90 proposals that they have in the marketplace. Their ability to earn goes up, but if you have the same 20% that sells, that means 18 of those sell. They should be able to get their hands on a solid 5 to 10 of those in year two. Come year three, now they're at whatever the numbers are. It's like 70 plus new 50 proposals, so it's like 120 proposals they have out there. 20% of them sell. That's 24. And their likelihood and percentage and ability to do these deals just keeps going up, and that's what they have to believe in and buy into. And I think any broker that's getting into this business because they think they're going to make money quick, I mean, they can, and I love it when it happens.
Sure.
But it's really just getting lucky.
Yeah.
And they have to buy into the long-term nature. And I think that's been working really well here, where people aren't so focused on like the quick hits and the money, but they're more focused on building their business and their career for the long run.
That was my entire first year. All I cared about was 40 proposals a year. Didn't care about the calls. I mean, my manager gave me a lot of shit for that, but I made sure I got the meetings and I made sure I got the proposals. And I thought of calls like a subway ride, right? Like I take the subway to get to work. Right? It's not a big deal. I make calls to get a meeting. The meeting's the big deal. Getting to work is the big deal. So
I think that's great, and it's actually a very different take on this. I speak to all kinds of owners of brokerage firms and senior executives of brokerage firms. Everyone has a different like flavor and take to it. It's really interesting. Yours is really just understanding the statistics of getting offers and really basing proposals and basing it on the proposals and then you looking at that as accomplishments.
Yes.
And then in the future, this will pay off, this activity, and you have to have faith in that.
For
I
a
think
new
that's
agent,
interesting.
I don't care about phone calls. I don't care about listings. I don't care about deals under contract or closed. I care about how many proposals they're doing. And it's honestly kind of a little twist for the company here, because we had a sales manager and I mean, he never got to the levels of success as a broker that I did, obviously. So maybe he didn't have like the vision that I had on that. But like he was all just about the calls. Like, did you make your calls? Did you make your calls? And the issue with making the calls is people get so focused on dialing and dialing and dialing that they're not really thinking about asking the right questions, about closing for the meeting, about what the angles are, and should I meet this person? Should I not meet this person? How do I filter this person out in my database for like likelihood of probability that they're going to do something? And also the issue with calls is the sales manager's like down their throat. Did you make your calls? 400 calls. And they have a live one on the phone, a real one that they need to go meet and they need to close. But they're so focused and worried about making their calls that they then just skip over it, because everyone is just so quick with everything today. Everyone's so distracted. They skip over it. They don't close for the meeting, and it never gets a proposal, but they got their 400 calls. I couldn't care less about their 400 calls or their 50 calls. It doesn't matter to me. I want all I care about in life and in business is results.
Sure.
And making phone calls is not results. But building a proposal pipeline that you can draw on for years to come of people that you've met, and proposal is someone that you meet, ideally in person, ideally not on Zoom. But like, you and I are meeting, and maybe we'd recognize each other off social media. But like, say that there wasn't social media, like now we know each other, and I'm walking down.
Oh, this is a way different
But
experience.
I'm walking down the street all of a sudden, and I see you, and it's like, hey, what's up, Chris? Like, we know each other, and I'm in places all the time where, like I was out with my family at a pizzeria in Park Slope, and like sitting at the table next to me is this guy that owns like a number of apartment buildings that wants to sell, and I knew him because I went to his basement and met him, and now like we are able to have that relationship. But if I didn't go on that meeting, he's just a random guy sitting next to me. I have no clue. So it's a matter of like making relationships with these people, having them know who you are, having that depth of potential business to draw on, and the consistency over time. I think it's a guarantee that people will make money as a broker.
Yeah. And you know what's funny about making it also, and this is following up on what you said, my worst years typically follow my absolute best.
Oh, yeah.
Isn't that weird?
Well, you
it's
rest
so
on your
weird.
laurels. Yeah,
I'm
fat
like,
and happy.
oh yeah, it's time to go. Where are we going? Let's go to Vegas.
You got fat and happy.
So like 18 was a monster year. 19, I went to Paris, went to Egypt, because I'm big on like world experience and adventurous travel trips and like friends groups and all that stuff.
We should introduce you to Adam LaBelle.
Yeah.
Oh yeah, I mean I know Adam.
He recently
He's went to Egypt.
Yeah, his last thing was his last thing was Abu Dhabi and Jordan and Turkey
and Egypt.
And he was in Egypt. Yes.
Yeah.
Abu Dhabi. Now
He was in Abu Dhabi.
that's-
And he was in
That's cool.
He was in Dubai.
Yeah, I mean Dubai.
He went to that
That's awesome.
sand castle in Jordan. He rode a
Okay.
camel there.
Oh yeah.
like
yeah,
Indiana
yeah,
Jones.
Yeah, sure.
He went to Turkey.
In Jordan, it's called Petra.
That's where he was.
yeah.
Petra. That's on the on the bucket list.
He's like been like all over China. I mean, he's been
that's
you name it,
cool.
he's been there.
So I'm definitely about life experience, but when you got those blinders on, right, and you're hitting it and deal after deal, like I remember 18 was monstrous, and then 2014 I did like 4 of my biggest deals all in 1 year, and it was like bomb, 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 right? And then so 15, I was just like, go guys, keep up the good work, you know. But is it hard for you to take off the broker hat and put on the CEO or co-founder hat? Because it's two very different things. You know what I mean?
I'm incredibly focused on brokerage.
Yeah.
I think brokering is the lifeblood of the business. So
Yes.
like that's the majority of my focus.
Yeah.
Fortunately, I have great partners in terms of managing and running the business.
Yeah.
And we have a really good system in place for
Operations and growth
yeah,
and
well,
training.
not even that. It's yes to all that.
Yeah.
But we have a really good system in place for kind of like understanding what our vision is for the company and understanding like kind of like where we're at and like what's working and what's not working and just like getting everything like into a place where we can distill it and identify kind of what needs to happen from where we are to where we want to go and what the issues are, and like we have a really great system in place, and we do a really good job of carving out the time in specific. Every quarter we carve out like a day to basically just go through everything in the business. It takes us an entire day. It's exhausting.
Yeah. I love those days though.
But from there, we're able to really allocate responsibility and who's supposed to do what. So you use the word CEO, and maybe, I mean, that's technically not my title, and maybe
What is your title?
It's just president. I don't
President.
know. Whatever.
Okay.
I mean, you know,
It's not king.
it's ruler of.
Ruler.
Yeah. No.
That's my card. King.
No, but yeah. So it works out really well, and you know, it's a really good partnership. It's a healthy partnership. We don't always see eye to eye. We debate
Oh, no, but I mean,
extensively.
that's
and we move it forward. But Each week we check in to make sure we're moving things forward. So
Why did you guys change the branding like completely? Yeah.
well, it was BRG, which
Sure.
is Best Realty Group, which is my last
Yeah.
name, and
And you had partner. It was too
Yeah.
centric.
well, I didn't really like it. I mean,
Yeah.
we didn't. There's just a lot not to like about it. I mean,
Yeah.
we didn't like our website handle, which was BRG-CRE, which was weird. I mean, instead we got IPRG.com, which is much better.
Yeah.
We didn't own the acronym BRG. It's owned by a company in Chicago, and locally it's owned by Benedict Realty Group, BRG.
Okay.
So we didn't like that. We wanted something that we could like have ownership of. I thought my last name was a little difficult to pronounce and say, and on top of that, it was frankly annoying for me to have my name on the company because, and it still happens, but I was just getting all this like inbound like garbage from random ass people that like wanted to sell me on their
Yeah,
random
no,
shit.
I hear
like,
you.
Like I'd get looped into these emails where like someone has an issue with someone in our company or some stupid marketing, not to say marketing stupid, but some stupid thing that I don't care about.
Yeah.
But because my name is on the company, I'm on this email chain and I'm on all the reply alls and
Yeah.
like I
You
just
also-
didn't see the point. And
We also wanted to go a little wider with the company, right?
Yeah.
Like we just
Yeah.
acquired a whole Jersey team.
Oh, I didn't know that. Good
Oh
for
yeah,
you.
yeah. We had
Good for
Yanni
you.
on the podcast a few times ago. It was great. See a lot of opportunity there. But
We wanted-
investment property realty group means something in every market. Investment
Yeah,
property
it
realty
really
group.
does.
Whereas BRG, I mean, people knew us in Brooklyn, right? But are we going to be able to, and New York, but are we going to be able to expand outside? We wanted a
Is that
descriptive name.
is that the ambition to grow to multi? I mean, now you have New Jersey, and like, are you guys going to go nationwide, or is that?
So we don't know the answer. I think IPRG is far better positioned to go nationwide than BRG was. Like I was in Colorado over spring break, and I was just out there, and I could see IPRG in Colorado, like for sure.
That's cool.
Our ambition is more like revenue
Sure.
focused. Like
Yeah.
we're trying to hit certain top line numbers,
Yeah.
and we know where we're at. We know where we've been.
Yeah.
So we have like a 3-year goal and a 10-year
Yeah.
target, and
It's great.
there's a ton of ways that we can get there. I have
Yeah.
no idea how it's going to play out, and we're open
Sure.
to however it goes.
Yeah.
Totally flexible in that regard.
For sure.
But I think moving outside of just the New York City market is probably inevitable for us to
Yeah.
get to the revenue
Sure.
type of targets that we have in mind. And I mean, we hired a retail leasing guy, Brandon. So
I think I met Brandon. Eli Zemsky, either.
he's very good
They're
friends
good
with
friends,
Brandon.
yeah.
They're in college
Did
together.
he bring him? I think he brought him to an event.
I'm sure he did.
Either an event or it was. I don't recall if it was online or I mean e-intro. I believe I met him.
Sure, yeah, Brandon's a great guy, hustler, hungry,
Is that leasing or sales?
leasing.
Okay, so I definitely think that
Retail leasing.
Retail leasing it's the same game. It's
Yeah.
it's all the same game. For me, dials are definitely important, but dials presentation, it takes a while. We got an exclusive tenant representation of a company called Muji, and we had this whole rollout throughout Manhattan. But one of them, we did a deal with TIA Cref, which is now Nuveen, 475 Fifth Avenue, right across from Bryant Park. That was one of our biggest deals, and we did that with Ariel Schuster of Newmark, and 15,500 square feet, 20-year lease. That was probably top 10 most influential deals that I've ever done, and that was one lease, and we did like 5 of them. So that was I feel that it's an art, it's a craft. The education is great on that, but I love it. I
Yeah.
love the game. I own retail.
The game is the best.
If he started 4 years ago, he'd say the other, like, I can't get rid of space. There's no time,
Yeah.
like
He's getting
it's-
rid of space.
yeah.
He's the guy's busy.
Yeah, no, I think that retail is definitely on the rebound. And in 21, it was on fire, and 22. And so I think office is where retail was sort of in the beginning of the retail apocalypse.
Got it.
And it took 8 years to get here.
Yeah.
And so that's when the rents went from 1,000 to 250. I mean, that's a 75% swing.
Yeah.
As far as rent, that's huge in valuation. We may see 50%, 60% in office. So I think I got to bounce.
All right,
but
cool.
this was great, guys.
Yeah,
thank you so
man.
much for having me.
For sure. Thanks for coming down here. Really appreciate it. It's good catching up and getting your perspective.
And I have one question. I interview everyone I want to interview, and it's a quick question. And I would love this for my social, and we can like trade info.
Yeah.
But I asked Larry Silverstein, Marianne Gilmartin, Ryan Sirhan, James Nelson, Bob Knackle, Tommy Donovan. I asked everyone this.
Okay.
And I'll ask both of you.
Okay.
What is your definition of resilience? What is resilience? And just what is resilience to you?
I mean, resilience to me is just getting up and staying at it each and every day. It's not getting knocked down. It's not losing focus. It's being resilient. It's persevering through the challenges and the obstacles that are inevitable and come up, and being goal oriented and focused on where you're going, and overcoming the random obstacles.
And how do you stay resilient? When
For me, I think
times are tough.
I think resilience is like a real big part of like who I am as a person. I think I've always gravitated towards like hard things in life, and like tried to figure out hard things, and like try to persevere through things that most other people like wouldn't do. And I like setting like challenges for myself. I like accomplishing those goals, and just I don't know, just having high expectations of myself and for myself. So how do I persevere? Like, honestly, I don't have a whole lot of like negative thinking or like limiting beliefs. I think that I'm like very optimistic, and I think I'm like really tolerant and able and willing to like roll with the punches. I think in large part the punches don't really get me. There's a lot of examples of this, but when I started as a broker at Marks & Millichap in 2009, I made something like $18,000 in my first 23 months. And I mean, this is all my money. It's
Yeah,
not like
sure,
I had anyone funding me. And most of that money came in month 23, and that was pretty hard because I was like plowing.
Yeah.
Like I made some money in the years leading up to that.
Sure.
I worked really hard to save it. I was very frugal, and then I started just plowing through like my net worth.
Yeah.
And, I thought that I could be good at brokerage, and I was willing to like do anything to know the answer. So I wasn't
Yeah.
gonna like quit. I wanted to like find the result. Even if I lost all my money in the process, I was either gonna lose all my money and then I'd be out of the business, or I would lose all my money until I succeeded.
Yeah.
And
That's a great thought process.
after a long time, I succeeded. At the time, I felt two things. Number one, I felt like I was in a very dark, long tunnel where I couldn't see the light at the end of the tunnel. And that was tough, but I just persevered because I believed in, doing the proposals would pay off. If nothing else, I'd learn the real estate market, so I could have that to carry with me. And number two, I felt like I was being dunked in a pool, for a very long time, and then finally I got like a deal, and I got like my head up, and I got like that breath,
It's awesome.
and then back down under the water.
Yep.
But yeah, man, I feel like I'm really good at getting the things I want in life. I don't need like instant gratification by any means. I'm willing to have a lot of delayed gratification.
I think you're built that way, and I think that is different. Because if you ask any junior to wait 23 months for 18 grand, my first year I made 22 grand, right? My second I made 28 grand. I mean, these are very low numbers, but 23, that's the longest I've heard from
It was 2009.
It was a very challenging
It
time.
also turned out to be the best thing that happened to me
Yeah.
because everyone else left the
It was
market, and,
2009.
Yeah.
and I was able to
Capitalize on that.
develop
Yeah.
my
Oh.
skill set
Yeah.
and become a good broker because everything was batting practice. So like
Yeah.
there's no fear of like, oh, I'm gonna mess this up. It's a big deal because there weren't, for me at that time, there just wasn't deals. It was all just batting practice. And
yeah.
I had fun with it. I mean, it was tough, but I had fun, and it became part of my story. And honestly, a lot of the way this company's been positioned is based off of that. I mean,
We're talking about resilience still.
well, yeah, but
Or
I
do
mean,
we got
it's-
off that.
No, I mean, I'm just.
What
this is
about
really
you?
rounding on it.
All right. What is your definition of resilience, and what do you do to stay
I'm
resilient?
gonna keep it short. But
Yeah, let's do
I
it.
think in our industry, you have to be very goal oriented. I'm very goal oriented. I'm like pretty obsessive, right? Like the start of every week, I write down my goals, I sign it, like I try to stick to it, and
That's interesting too. I never heard that. You create a to-do list and you sign it.
I sign it.
Not a to-do list. It's
No,
a
it's
goal.
It's goals, and I envision myself.
What do you call it?
What?
What,
In terms of what?
well,
My goal
Here we
list?
go. Here we go.
the list, the name for the list.
Well, let's pull it out. I have it
Well,
right
what-
here.
what is it?
Well, I
It's
have
the,
it right on top. So it's called manifestation. I write
Love
it here.
it.
Keep it on me. I sign
Yep.
it. And listen, I'm
Look at
very,
that.
I'm very strict
That's a
on
real.
it.
He's got
That's
his
that's not a to-do
manifestation
list.
list.
It's a
Right here,
real.
look. And I sign it.
He carries it with him everywhere he goes.
Amazing.
Yep, sign it. And listen, I act as if, right? These
Yeah.
goals, I did this. I did this year. I'm doing this. This building's going to be a success. I'm going to make X amount of money. Like I made this amount of money. So I write it down. I sign
Yeah.
it. I think brokerage, you have to do this. It's hard because you have to do the same thing every week.
single day.
You get 2 days off, maybe 1 day off at
Yeah.
the end, then you start it again.
Yeah.
And I think that's a big part of it. For me, there's people in life that I've learned that everyone wants to make money, right? They want
Yep.
to be successful. They want to be rich.
Yes.
So then there's people that they will be miserable if they don't do it, and there's no option not to do it. So in my goals, in terms of like making a certain amount of money, having a certain net worth, owning a certain amount of buildings, like that is, I obsess over to the point where I would be very miserable if it didn't happen. And
Amazing.
I live by that. And there's a lot of people that act like they want certain things, but they're okay with not getting it. And then, do you really want it?
Yeah.
That's my opinion.
And to pay the price, right?
Yeah.
Every single year, over and over again, and then you'll hit that.
Yeah.
And then what? Now you have a new mountain.
Yep.
And here we go with your ambitions. Right.
How about for you, Chris? What is resilience to you?
That's a great question. It really is just about getting back up, right? Let's say you lost a huge deal. We've all lost deals,
Yeah.
but this was the deal.
Yeah.
The check was $900 to you,
Yeah.
right? And you've been working it 9 months, 13 months, whatever it is, right? And it's just gone. It's just gone. Or someone else got the exclusive and the landlord's not giving, whatever it may be, and it's just not there anymore. Or you did a bad investment, like even for stock market, you invested in Bitcoin, right? For me, it's about taking a step back. So that's what I always have to do. I got to just take a step back and then reassess the situation. For sometimes if it's a real hit in the gut, you got to take a day off. You know what I mean? Just take a day off,
Yeah.
chill out, go spend time with the fam, go hang out with your best friends, go for a drink with your buddies, whatever it is, just to change that vibe. But then you got to get back into the ring. You got to get back into the ring because do you still want it? And I do something similar to this, but I frame it, and it has a to-do date. All right, and it has a to-do date. It's always it's a 5-year plan, not a daily. I love that. And it has the date. So I have a picture frame, and it says 1/1/2027, and it's also a North Star because I'm not looking at it every single day, but when I feel like, what the hell am I doing, right? Why is this happening? I lost this deal. I'm doing that. I'm not being focused. Why? Look at that, and I'm like, oh yeah. You want to hit that revenue target. You want to hit these deals. You want one deal to bring in this amount of commission. You want one deal that will blah, 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 whatever it is. And here's the crazy thing. I've been doing this probably did it in 07, 06 that I started. You'll be shocked at how many of those things you've
We were just talking
accomplished
about this.
Yeah, it's true.
in a 5-year.
Manifestation's a real thing.
It's crazy.
I got this. I mean, listen to a lot of podcasts.
Yeah.
I'm a fan of Grant Cardone. Just
Yeah,
like
sure.
I used to watch a lot of his stuff, right?
Yeah.
And he used to say that he would just write down his goals like hundreds of times a day, and I was like, that's interesting, and like they come true. And
come
I
true.
started doing it. Not that I write it once a week.
Who has time?
Your hand will fall off. I don't have that much paper. Come on. But it's crazy. It works.
Yeah.
It really works.
It's good.
So yeah, you gotta love the game, and it's really just about reassessing. And look, people tell you it's okay to leave and it's okay, but I also, the opposite of you, this is my family's 54th year and my name is on the wall. That's it.
Yeah.
That's it, buddy.
Yeah.
It's been written. Okay. If I take a punch in the face, I'll do it.
Yeah.
But I still love it. But the tunnel, a lot of landlords are in that dark tunnel right now. A lot,
Yeah,
and I speak to them. You speak to them. A lot of even multifamily guys.
Oh, yeah.
Right. If they bought, if the Upper West Side, there was a package, of distress, and it's all rent stabilized, and they were, they bought it at a 5.5 cap. Now market's 6.5 for RS. There is no market.
Yeah.
Right.
It's tough.
So what are they going to do? So I think it's an amazing time to spread those messages, even with the manifestation, even with the getting back up, even with the tunnel of 23 months, and just sticking it through. And for me, taking a step back, chill out. Do you still want to be in the game? Do you still like what you do? Do you still want to ascertain these goals? Do you still want that crib? I have a crib in my mind. I don't have a house because I've been putting money into buildings and all kinds of things. But I have a house in my brain. It's a Mediterranean house. It's not that big, 3,500 feet, 2-car garage, pool, totally AD'd out though. Architectural Digest, it looks like sick, right? In the burbs, an hour from the city, and I'm going to get that. Like, that is what I want for the family. You know what I mean? Yeah. I definitely want that. I'm not going to stop without that. Like, I'm actually pissed off that I felt like I lost a year or two, a year and a half because of the pandemic. And, I felt like I lost that, and because of that lost time, that I'm annoyed. I just turned 43. I felt like, man, I'm really 41 in the game because I lost 2 years. But it's a little bit of anger. Actually, It's like a little bit of just, this is what I want. Like, I'm gonna get it. So now that something happened to me when I turned 41, I was like, oh, this is it, buddy. In my 30s, it was all about climbing, and I want to be a millionaire. I want to, travel the world. In my 40s, when I turned 40, when I turned 41, I was like, oh shit. You said you want that crib. What, are you going to wait till you're 50? I mean, you can. I mean, I'm not knocking anyone.
For sure.
But you're saying you want that crib. You're saying that you want that crib on passive income. Buddy, you need to step it up. Yeah. Because now that $2.5 million home is now 3.25, buddy.
Yeah.
You know what I mean? And interest rates are 6.5, and they were at 4. So now your $15,000 a month, $16,000 a month budget that you want, blah, 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 blah. Now that's 25.
Yeah.
And so you need to step it up, right? And I have this whole thing where I want all of my passive income to pay for my lifestyle and to keep that disciplined. It's very tough. It's not, it's an up and down road,
Yes.
And so that's my definition of resilience.
Nice. It's a good one.
You gotta still want it, even after you get black eyes, even after it's not happening in your time frame. And I'm a big spiritual guy. I've been a Sunday school teacher. This is my 19th year. I don't know if you know that. So yeah, there's a whole side of me that I should shine more light on that I do not, and that is with my faith. Now, I don't care if you're Jewish or Christian or Muslim or whatever, but I find great strengths and kind of blessings.
Yeah.
I feel that, just looking at my to-do list or my wishes of my 5-year goals and then having 75% of them checked off every single 5 years, that's not normal. That is not normal. And I would say the same for you, So or the
I
same for you.
identify very strongly with my spirituality.
Yeah, I think
It's a big part of who I am.
no one talks about it. I mean, maybe in your community, maybe you do, maybe I don't know, but no one really talks about it, But to be blessed, you got to be blessed.
Definitely.
You understand what I mean? And then you have to understand that and study that whole side, especially when times get tough. You can rely on your boys. You can rely on your inner a compass and you can rely on your family. But sometimes you need a little bit extra. You need that extra push, especially when it's like family health issues, elder care, like so many things that are has nothing to do with this. And then you come into the office and your energy's a 3 just because it has nothing to do with work. It has to do with life stuff. And that happens to everyone.
Yeah.
So I don't know.
Very true.
Those are my ingredients of success. Same with you. Target,
Chris.
goals, manifestation, and you always be closing. And every deal counts.
All right.
Always be closing.
Let's leave it
Every
there.
deal counts. And I'm betting on New York City. So those
right.
are the 3 things
Good
that everyone
stuff.
knows.
Good.
All right.
Thank you so
All right.
much.
We were here from sun up to sunset.
These brokers can really talk, huh?